Kangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB this Wednesday. I'm Juliette Sarley. Great to have your company as we look to potentially a fresh record closing high for the ASX 200. We're going into match off now. You can see the CBO 200 there up 0.6%, and the ASX 200 heading into match off up 0.8%, 8,605. So that surpasses the previous record closing high of, I believe, 8,592 mid-June. Not the all-time high. Remember, we got an intraday high of 86.39 mid-June, but it does look like it could be a fresh record high. We'll wait to see what happens in the next 10 minutes or so, but it has been a positive session today as we look at the three themes and the ASX ascent. Meanwhile, though, we have seen Qantas heading the other way. Frequent hackers hitting here the frequent flyers of Qantas. Qantas announcing before the market opened this morning that around 6 million customers have had their data breached. That includes the likes of birth dates, emails, names. Fortunately, not credit card information, not passport numbers, not PINs. Qantas saying it has contained the incident, but we're waiting to see whether or not it's part of that same attack that has happened globally, that scattered spider attack. I spoke to Trevor Long from EFTM earlier. He thinks these type of cyber attacks are likely to continue and show the need for companies to be aggressively spending in cyber security. And then a little bit of belt tightening. The retail trade data very much missing expectations today for May, and that just has got the momentum continuing that we will see the RBA cut next week. Pretty much all the economists that had said that they wouldn't see a cut until August have come forward. That includes Phil O'Donoghue from Deutsche Bank, who we'll speak to tomorrow. ANZ also saying they now see a rate cut next week. And I spoke to Jason Todd from 10cap earlier today, and he thinks, or they think at 10cap, that the rate cutting cycle is going to be deeper and faster than many are anticipating. Let's having a look at where the miners finished today, particularly as we're continuing to monitor this upward momentum in iron ore. BHP, Rio, Fortescue all looking good. Is the rotation that everybody said would start this new financial year happening already? You can see Fortescue there up by 4% to $16.02. And that means, of course, that perhaps money is coming out of the banks, although CBA did finish higher, up by a third of 1% to $183.52. Looking at some weakness in the tech space, specifically with Xero, NextDC and Zip down by 5.4%, but WiseTech Global and Tech One had a good session. Well, of course, Qantas is one of the stories we've been following, down 1.5%, so looking better than the near 3.5% low that it was at around lunchtime on the back of this cyber attack. Helia also coming under pressure, revealing long-term customer ING Bank is negotiating a deal with alternate providers. Meanwhile, Domino's hit hard as well. This is as we hear that Mark Van Dyk, who's been the CEO for less than a year, is going to step down in December. Domino's, though, saying to the ASX it's not aware of any information concerning that it has not already announced to the market that could explain the recent trading in its securities. They're not aware of any reason other than the market announcement made regarding leadership changes. Shares down 15% to $17.12. James Hardie, one of the best performers today. That says it's moved its listing, its key listing now to the NYSE on completion of the acquisition of the US company AZEK. And Perpetual there up by 8.3%. UBS upgrading the outlook for the stock to buy from neutral with a short-term share price target of $22.50, which implies underlying growth of more than 11%. Let's welcome to the COB our Wednesday guest, Mark Gardner from MPC Markets. Mark, great to see you as always. Looking like we could get a record closing high here on the ASX 200.
Yeah, it doesn't really surprise me. I don't think we've had a down July since, for a decade now. So overall, I think we'll probably see some positivity over the next couple of weeks, particularly the ASX. That little spark in the mining sector, I mean, there's some pretty deep value there in that sector at the moment. While we've had a pretty good move today, I can certainly see those, they've got plenty of upside, particularly if the Chinese economy starts to have a little bit of a kick. So yeah, I think it's fairly positive for the Australian market overall for at least the next couple of weeks.
And it does look like potentially, which so many people, including you, have been saying, that we are starting to see maybe that rotation back into the miners from the banks.
Yeah, I probably wouldn't pay. I mean, I've been saying that for a long time though. So I think I think it does start. If it does start to unfold, I dare say the mining sector will just play catch up overall, really. But I don't necessarily see there'll be a massive rotation. We'll have bank results from the US in I think around about 14 days. So it'll be interesting to see how they go over there. But even the financial sector overall is doing quite well. I think GQG's back up quite significantly to around about that 230 mark. It was around 190 very recently. So and Macquarie Bank's at those highs as well. So yeah, it's a little bit less of the story about just CBA now, and I think the rest of the market's really starting to pull its weight a little bit more, which is really encouraging because it's when you're not in that one stock, you're sitting around waiting for the rest of the market to catch up. It's nice to see the other sectors start to make some progress.
Yeah, indeed. All right. Well, when you look at the new financial year, Mark, and where there could be some upside, what are you looking for, considering that we are expecting this rate cutting cycle to kick off? And as I mentioned, a lot of people are saying it could be faster and deeper than what we were potentially anticipating.
Yeah, look, I think you've got to be wary of who's saying what. I mean, 10cap is a growth orientated fund. So, they're always going to be cognitive bias is always going to lean on the side of deeper and sharper. And obviously the banks are always wanting lower rates because they sell more mortgages as well. I think that, I think we probably will get a rate cut in the next month or two. Obviously the central banks, as outlined by Jerome Powell overnight, they said they would have gone had it not been for the tariff uncertainties. So, I think overall, we've got stock markets at record highs. We've got property markets at record highs. I mean, we're not talking emergency circumstances here. So, and we've still got retail sales in positive territory. So I really think a sharp deep and, when we've got unemployment in the low fours, inflation's broadly under control, but could be affected by tariffs and dragging prices up. Yeah, I don't see a case for that at all, and I think a lot of people just talk their book on rates quite often, and we will just see what happens because we were calling a rate cut in Australia a year before it actually ended up happening. The historical averages play out pretty well for central banks, and you've got to be very careful not to get caught in the noise, and see the forest for the trees a little bit with rates because there's no real significant case for rates to be sharply reduced. The economic figures do not justify it whatsoever.
All right. Well, as they say, a broken clock is right twice a day. So if you keep saying things long enough, perhaps to your point, Mark, things do come true. In terms of what we've seen stocks specifically, what did you think about Domino's, that massive tank on a leadership change? Is that the only reason?
It's a little bit like the straw that broke the camel's back, I think, for Domino's. It's been under pressure for a very long period of time, and look, it's a pretty harsh reaction for a CEO that's seen the share price drop significantly. I think it's just probably shareholders almost going that, well, that's it, I'm done. They've finally sort of given up a little bit. And you've seen that in some stocks. I think the pain for Helia particularly probably might losing a second customer. I don't think they can spin that. We had Helia there for a while. We were hoping to have that, the pickup of that second customer. Certainly weren't looking at them losing another customer. So yeah, that, a snowball of bad news over a long period of time. I think investors just eventually, they're just out. So I think that's probably what's happened with Domino's today in particular. And, if it starts to head further down, I think a change in management might not necessarily be a bad thing. We could start to see some deep value there.
Well, speaking of management, I mean, the first real big test for the new CEO of Qantas with this cyber attack. And as somebody told me earlier, it could have been any company that this happened to, but it happened to Qantas, meaning they're in the headlines, likely to dominate all the news cycle for the next well, at least tonight, I would assume. What do you read into when we see big companies like this hit by cyber attacks?
Yeah, the responses is more and more muted as time goes on. If you think back to Medibank Private, that was a really harsh share price reaction, and it bounced back relatively quickly. And look, it was only about 4 or 5% today, I think, for Qantas. Look, data breaches are a fact of life, and I don't think that I don't think they're particularly avoidable. And because you've got to keep your costs under control, obviously, as well. Obviously, credit card data was kept safe, is what the company's claiming so far. So it's just those the frontline details like names but that sort of stuff we give away on Facebook anyway. So I think that'll pass pretty quickly for Qantas particularly. But it's not a good headline. I would not like to be the head of cybersecurity at Qantas right now, but overall, I think these things happen to companies and will continue to happen to companies as time goes on, particularly as we come into AI, because criminals have got AI as well, and AI is making it much easier to code and much faster. So cybersecurity's got to really keep up, and we're seeing a lot of problems within the likes of the deep fakes, where the industry's essentially given up. And they're even looking at solutions like having things verified on a blockchain like Solana is the only way they can deal with it, because they actually can't keep up with the, with how fast the criminals are moving in terms of producing those deep fakes.
Yeah, indeed. All right. I think that your dog there barking, Mark, is a sign that we did close at a record, yes. 8,597, up 0.7%. Thanks so much, as always.
They're barking in joy because they're long CBA.
Oh, excellent. All right. Good to know someone is. Thank you, Mark. All right. Well, getting back to some of the stock specifics, we had a special technical on the call, and we had two stocks of the day, Magellan Financial and Civmec. Our experts, Michael Gable from Fairmont Equities, Jonathan Takadina from MPC Markets.
Essentially, I think it's one to keep an eye on. It could be a turnaround if they start to see funds under management improve. Obviously on the back of potentially better performance. We don't know if these things will happen, but purely from a technical point of view, you see a break above a blue line like that, because that base has been in place for a few years, you could end up with a fairly decent move. So early days, but one to keep an eye on.
When engineering companies trend, it's almost ruler-like. They basically just keep powering away. And so the stocks I mentioned were ServiceStream, SRG Global, and Tasmea. And if you brought those charts up, it just looks magnificent for a trender. So great that you know that engineering companies do trend well. It's like, okay, but what's the next one? So I had a look around, and Civmec popped up. And the trend has only been going for maybe the last 2-3 months. So I think there's got plenty more to go. Like obviously you see it's trended high today. So yeah, that's one I think that could do really well for FY26. So keep an eye on it. So CVL is the code.
All right, so CVL and of course Magellan are there. Let's have a look at the market leaders. We have hit a record close, just pulling back from 8,600 points though on the ASX 200, but still a record closing level, I should say, not the highest that we've ever seen on the ASX 200. Perpetual there, of course, had that broker upgrade. It's up 8.3%. Magellan, we just touched on with the call, up almost 6%. And James Hardie, one of the front runners too, moving its main listing to the NYSE. It's acquired or completed the acquisition now of ASEC, up by almost 6% to $42.93. Looking at the laggards there, we saw Mesoblast coming under pressure, reaching an alignment with the US Food and Drug Administration, but it's Helia Group, we touched on that at the top of the show, losing yet another contract with ING, and Domino is down 15%, as Mark Gardner said. Perhaps this last piece of news that Mark Van Dyk, the CEO, is leaving in December is just the final straw that broke the camel's back for people that had been waiting for some positive news. Analysts saying that, does this mean there's more bad news out there that we don't know about Domino's? Because Van Dyk, who used to work at Coca-Cola, has already made some sweeping changes, including closing 200 loss-making stores. Zip also under pressure today, down 5.5%. In the small end of town, Energy World, wow, up by 88% today. Pacific Smiles as well, having a good session, up by 12%. To the downside, in the small end of town, Terramin off by about 12%, MoneyMe down by 9.4%. Tonight we get the US ADP employment report and the US Challenger job cuts report, all ahead of the non-farm payrolls, which will come through on Thursday this week instead of Friday, because of the fact that Friday is a public holiday for the July 4th Independence Day. Locally tomorrow, not a lot out there, but we do get the May trade balance, and also ALS is trading ex-dividend. All right, we've closed at a record closing high, I should say, on the ASX 200. The highest close we've seen at 8,597, up 0.7%, 56 points. And you can see there the CBO 200 up 0.6%. Pretty much every sector except IT higher today. It was down by around 0.6%. And we touched on some of the very solid momentum that you saw there, particularly with a lot of the financial players. Worth noting AMP as well had a good session, up by about 5%. All right, that does it for the COB for this Wednesday on a record closing high day. We'll catch you again from 9:45 a.m. Eastern tomorrow.